So learning these three phases has absolutely changed the game for me when it comes to day trading in the markets. And while most binary options traders only really focus on indicators here on YouTube, I can guarantee you that if you pair up what it is that I'm about to show you with your indicators, it's going to be able to take your trading to a whole nother level. And as I always say, the biggest room in the world is the room for improvement. We want to always be getting better. So what we're going to be doing today is I'm actually going to be giving you guys an inside look, a behind the scenes look at one of our live training sessions that we had here with our group just a few days ago, where we really sat down and we went more in depth especially for some of the new members, on the three market phases and how to trade them. And then not only did we break it down, but we also looked at some live examples on the charts and kind of went into how you can use this with the strategy. Yes, the best binary option strategy out there right now, which is the three-step setup, guys. And I'm telling y'all, man, we just here, we dropping bombs, we giving sauce out for free. Thank me later, it's all good. But let's get to the video.
But it's something that when I actually started to understand this, it took my three-step setup to a whole nother level. Now, we know that obviously when we're trading in the markets, there's specific, obviously, directions. There's three different directions that the markets move in, right? We know they move up, they move down, and they move sideways, right? So we know there's three different directions that the markets move in. And a lot of the times when we trade, especially binary options, you guys know I absolutely love binary options, right? But when we trade binary options, okay, a lot of the times when you're trading in general, people only really look to make money in two directions. And that's the ups and the down movements. And one of the reasons why I like binary options is not only because it's a fast-paced environment, it's almost like you control the position because it is time-based trading, which allows you to obviously control how long you're actually in the trade and whether or not you're going to be pulling out with some profit. So I like it because of that. But what I also like about it is that there's so many different ways to make money in it, right? See, traditionally, when you trade, you only make money. As a matter of fact, let's peel it all the way back. When you're talking about stocks, right? When you talk about stocks, naturally, when you're in the stock market, you really only want the market to go one direction, right? Which is up, right? When you start the day trade or get into the trading space, typically you only make money in two directions, which is ups and downs. But when we talk about binary options, see, binary options change the game. And we're going to talk about this today. But binary options change the game because you can trade in every single market phase. And that's what we're going to be talking about. So how many of you here know the three market phases, three major market phases? How does the markets move? Three major phases. How many of you here know the three major phases? Drop it in the chat for me real quick if you do. If you don't, drop a 0. Almost. Melina, you almost got it. You almost got it. Shout out to Melina. Melina's fairly new. She's probably one of the newest people on the Zoom. And she's in the chat, man. I love to see the participation. But very close, but not quite. Watch this. So when you're talking about the market phases, this is how it works, okay? Take notes. Take notes. First phase is going to be, first phase of consolidation. The next phase, okay, is going to be what's called, starts with an E. See if anybody gets it. It starts with an E. What was that? There you go. Expansion. There you go. The next one is expansion, okay? And then last but not least, we have the trend. All right? Now I want you to follow me real quick, okay? Just bear with me. All right? Just bear with me. Okay? So the three market phases, let me type it out because I didn't finish typing it. So we got consolidation, expansion. All right? I ain't got my glasses on, so bear with me. All right? Boom. By the way, guys, I lost my glasses. I got some backup glasses here, but I don't really want to wear them. And then trend. All right. Boom. All right, boom. So consolidation, expansion, and the trending market. Okay. Now, the reason why this is actually really cool, there's a reason why this is important for you to remember and for you to understand. Okay. It's because when we talk about the three-step setup, guys, what do I always say? The three-step setup is not the end-all be-all, right? The three-step setup is the what? It's the setup, okay? So it's not the everything, it's the setup. So in understanding that, what you really have to understand is this. Okay, give me a second. I'm going to change this real quick. All right. Well, All right. So in understanding that, what you really have to understand is this, is that in the setup, I always tell you guys, you have to be willing to learn more. And the more that you understand the markets, the more accurate your entries are going to be on the three-step setup. So when we're talking about consolidation, expansion, and trending markets, let me break this down for you in terms or in a way that you might already be familiar with. The consolidated market for most traders is what we as binary options traders just call the range. Okay? It's the range. Okay? The expanding market is where most people get faked out. Okay. And then you have the trending market, which is my personal fave. All right. It's not, there's no real name for it. It's just my favorite market. It's the trending market. There's not multiple names for it, right? So, so when you talk about the ranging market, as we know, and the reason why this is very important is because you're going to want to know, not just know, because we always talk about what time is it that you trade, right? Because obviously we know the times that we trade play a huge role in the style that we're going to be taking these positions. I was just talking to another chairman within the company that's not in our organization, but that used to get on our go lives and had pretty much a good portion of their team on go live as well. But I was telling her, you know, when it comes to trading, see, a lot of people, the biggest mistake they make is that they're so black and white. And what I mean by that is they're so focused on what is the best thing to do and how do you do it the right way and all of this other stuff. So one of the biggest questions I get from people is, how long are your trades? And my answer to that is, I always tell people, it's subjective. It depends. And although there's a lot of different things that it's going to depend on, you know, primarily for you guys, just to let you know, my favorite positions are always it's a 3 minute. I always take 3 minute positions, but 3 minute, 5 minute, and it's sometimes like 7 to 10. All right. I know some people do a 3 candlestick rule, which would be 15, and that's awesome, right? I'm just telling you what I do. Okay. But how I determine those position times in terms of my expiration and how long I'm in it is obviously based on my confirmation, but most importantly, the type of market that we're in and the session that I am trading. So for example, if I'm trading a consolidated market, a lot of the times on a consolidated market that, you know, where you're trading the range from up and down and stuff like that, you know, you might want to go for, okay, a little bit, and it also depends, but you might want to go for consolidated markets, some longer expirations. Now, why would you want to go for a longer expiration on a consolidated market? Does anybody know? Drop it in the chat. All right. Okay. On a slow moving consolidated market, because there are some ranges that move pretty fast, and that's more going into expansion phase, right? But on a slow moving consolidated market, the reason why you would want to go for maybe a little bit longer, when I say longer, I mean like 5 minutes or 7 minutes. The reason why is because, okay, is because sometimes the markets move too slow, right? How many of you here have ever placed a trade that you thought it was going to go in one direction, okay? It ended up not going in that direction. You lost the trade, and then after you lost the trade, it went in that direction. How many of you here that's ever happened to, right? It used to happen to me all the time. And so I started to identify what kind of markets I'm trading in, right? So sometimes you got to understand with certain setups, you might need a little bit more time to be in that trade for it to make the full move, but you have to understand, okay, well, what phase am I in? Because if I'm in an expansion phase and I'm trading a range, well, then I know an expansion does what? It gets bigger, right? So I know my moves, you know, my pushes to the upside and the downside are going to be a lot bigger, which means, you know, you're probably going to have a little bit of volatility before it breaks out and moves into a trending market, right? In a consolidated, that smaller consolidated market, sometimes you might have one candle drop, then it comes up a little bit, then it stays, then it drops, right? So because the markets are moving so slow in such a small piece of, you know, area, I personally stay away from those, right? But if you are going to trade it, my advice, maybe you might go for a little bit longer, 5 minutes, 7 minutes. Now, don't overdo it and go crazy. I don't use a 3 candlestick rule on a consolidated or a ranging market. I believe that is just too long, right? But That is something that you might want to know. Now, the expansion phase, a lot of the time, the expansion phase can be a little bit unpredictable. But if you're getting your confirmations and you understand market structure, okay, if you're getting your confirmations and understand market structure, you can start to understand a little bit which direction that the markets might be moving in. So, for example, if I did this, okay, let's say I did this. As a matter of fact, let's take all of this out. Show you guys something real quick. Okay. What kind of indications might I have, okay, of where the markets might be going next? We running this just like Go Live. So when I get on, I need interaction. Right? I want y'all to learn. I had way too many people making money on Go Live. We need to bring that to the team, right? We need you guys making money. All right. So this is not the time to be shy. This is not the time to be quiet. And if you're walking around in your kitchen or doing something else, you need to sit down, take notes. Talking money here. Perfect. Ivan, right there. So you have the higher highs, right? And the higher lows, right? So you have the higher highs. So this is the thing right here. So even though we know, so market clearly is moving from a range right here, where range, if you guys are not familiar with what a range is, it's when you're looking at a market that is bouncing off of a specific price range. Okay, that's a very self-explanatory explanation there. But market is bouncing off of price range. Boom, 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 boom. Right? So in bouncing off of that price range, okay, you're looking at, okay, this was the price range it was bouncing off of, and then expanding a little bit out of that range. It starts to make some bigger, bigger kind of moves or bigger pushes in the market. But what we also see is that from this low to this low, it's higher. So that's a higher low. From this high to this high, it's a higher high. So even though the market hasn't necessarily made that move yet, there is an indication that, hey, if we get a bounce here, remember, we always talk about our bounce, right? Our confirmation candle and an entry. But if you get the bounce here, this will be a good indication that we might continue to expand to the upside, break, retest, and then you get your nice trend. Now, how many of you here have ever traded like the break and the retest before? Let's get it. So we know that obviously if you're trading in this market and it comes, you create the higher high, it bounces off of what? The middle Bollinger Band, makes its way, it breaks that resistance, comes back, bounces off of the top of the resistance on the top side, is going to continue to move up and get that nice trending movement. The reason why it's important to understand these three phases, because you always want to know which phase you're trading in, because a lot of the time that's going to dictate or determine what you look for in your confirmations, as well as how long you might want to be in that trade. Okay. And also what kind of setups you might want to be taking. All right. Because even if you're trading a range, a lot of the times you want to know about the break and the retest. If it breaks what? Breaks support, resistance, comes down, you got the middle Bollinger Band right here, bounces off the middle Bollinger Band, you get your stochastic cross and everything else to the upside. That's going to be a beautiful position for you. Okay. I personally like to trade right in this area towards the end of an expansion. I like to trade the breakout and then going into the trend. I trade New York session in the morning. Okay. I trade New York session in the morning, which again is going to be that breakout. You get the nice movements, it breaks out into a specific direction. And then eventually you're going to see a nice trend that continues for the rest of the day. Now, what's even awesome about this is that when you start to understand these three market phases, you're also going to understand, because I get this question a lot as well, is that they happen on every time frame. Okay. You can identify this on every time frame. So even though I'm talking about binaries, this isn't just for binaries. Okay. So it's just for binaries. All right. Remember, I started trading on MC4 first. And then I found binaries, and binaries just is way litter. And I was like, you know what? We're going to move to binaries instead. Right. But it isn't just for binaries. So these phases can be on any time frame, as well as in any market. You're going to be able to find these three market phases. Now, let's go ahead and look at the actual markets here, okay? A nice consolidated phase, right? And within this consolidation, we can also identify a nice range, right? Not all consolidation is bad. We do see a nice range. You guys see that, right? Now, remember, on the range, we're just looking for bounces. Or for support resistance, right? And if we're going line to line with our confirmations and our stochastic crosses, we can see we're getting some good entries over here. All right, just going off of, some strict, at or near the Bollinger Band, support, resistance, stuff like that. I'm just going to line them up for you guys. You guys are seeing them. These are back-to-back setups coming in right here, right? So you do get a nice range. Beautiful range. Over and over and over again. Where do we get the next confirmation? Nope. Confirmation. Nope. Confirmation. Yes. Boom. Right? Right here, we actually have another no Bollinger Band, but that is support. So we can drop that there, right? But little things like this, okay? So you see we're getting multiple bounces on this range, okay? Boom. So this is consolidated range phase, all right? I'm going to show you guys how this looks live in the market. So as you guys see, after getting this nice range from top to bottom, we start to consolidate really quick. Now, this is actual consolidation in the binary world. So if you guys see right here, we're getting a lot of candles that are pretty much the same size. Those same size candles, okay, from top to bottom, this is what we consider consolidation. And obviously, we don't look to trade in those markets, right? But right after that, what happens? When the market shoots up a little bit, expands to the top, comes down, comes back up to the top, comes back up to the top, and eventually starts to come down. Here, what kind of market do we have here? What phase? Okay, it's not a trend just yet, because in order for this to be either an uptrend or a downtrend, we need to break current market structure. We need to break the current range, right? And not only do we need to break that range, but we need to continuously, obviously, get those. Like, for example, if this was a downtrend, we would need to get the lower lows. So even though the market goes from here to here, this isn't a downtrend yet, right? Why? Well, because number one, this whole move down is still within this consolidated range. So that's sideways movement still, right? It isn't until it breaks support, broker support, new low, lower low. Guys see that? So in order for it to be a trend, we need to either create a new low or a new high, right? So this whole area, you can trade this going down. That's not a downtrend. You're just trading the middle of a range. Which, do we trade the middle of a range, guys? Do we continuously just take those positions when the markets are going down or when the markets are going up? Yes or no? No, right? So what do we need to see? We need to see it break support, create a new low, and even when it creates that new low, are we getting in just yet? No, right? What do we want to do? Wait for the retest to the downside, and then we'll get in. Creates a new low again. Wait for the retest to the downside, and then you get in. All right? And that's typically how you trade. Obviously just trading in this market in general, that's typically how you would do it. But what I also want to show you guys is that for those of you who do trade the three-step setup, you know that when we're trading in a trending market, right? When you're trading in the direction of a market, all right, typically you don't use the top and the bottom Bollinger Bands for your overbought and oversold. You guys remember this, right? So how many of you here trade trending markets with the three-step setup? Drop me in the chat real quick. So what do I always tell you guys, okay? When you're trading in the trend, see, typically when you're using the Bollinger Bands, we're looking for what? Overbought and oversold, right? Overbought on the top, oversold on the bottom. But if the market, now remember, overbought, when the markets are overbought, what are we doing? Buying or selling? When the markets are overbought, are we buying or selling? Selling, right? Perfect. So when the markets are overbought, you're looking for a sell. Now, here's the question for you, okay? If the markets are in a downtrend and they're continuously going down, do they ever really become overbought? Because in order for the markets to move in a downtrend, people need to be doing what? Selling, right? So if everybody is selling, how does something become overbought? It doesn't happen, right? So when you're trading in the trend, see, when you're trading expansion, when you're trading a range, you look for the top and the bottom Bollinger Band. But when you're trading in the trend, the most significant confirmation is going to be the middle Bollinger Band. That is my entry. The middle Bollinger Band. The market's going to retrace back to the middle Bollinger Band and then make its way down, right? Now, obviously, if you line that up and get your confirmations and you're good to go, see, that's the entry that you want to get in. Now, how crazy is that our setup, the 3 steps, okay, the stochastic cross, the middle Bollinger Band, is lined up perfectly with the what? Break, retest, and drop. Isn't that crazy? So the setup that we usually trade, right? The setup that we usually looking for is lined up perfectly with the what? The break and the retest. So that's why I always tell people I like to trade the break and the retest. So when we're talking about the market phases, it's very important to know this kind of stuff. It's important to be able to understand the phase that you're in. You know, I talk about all the time. When we talk about trading, everybody thinks trading is just strategy. And that's not the case. Okay. I know that sounds crazy, right? You go online, if you go on Google, if you go on YouTube, if you go on Instagram, everyone's talking about how they have the best strategy. It's a 90%, 100% strategy. You're going to make a bunch of money. You're going to be a millionaire by next week. But the reason why most people are not millionaires, the reason why most people don't make money in trading is because you're being sold what you want to hear and not the actual truth, right? You're being sold what you want to hear and not the actual truth. The truth is that when it comes to trading, majority of it, 90%, 80% of it starts right here. It starts right here. It has nothing to do with the strategy. The strategy is the smallest part. We can all here trade the same strategy. In fact, in the beginning, almost everyone here on this call said you trade the 3 steps. But I can assure you, there are some of you here that make a lot of money on the 3 steps. There are some of you here that are starting to gain consistency on the 3 steps. And there are some of you here that are brand new and haven't made any money yet on the 3 steps. But how is it if we're all trading the same exact strategy? It's because of the experience that you have in the market.
I feel just like a rock star.